Are you ready?
Ready.
All right, let's go. Kevin here, top 100 financial advisor and best-selling author. We are here to talk about the stock market. Today, I want to discuss some of the things that I look at when I'm making adjustments to my portfolio. So y'all know, if you've been here for a while and you've subscribe and get your notifications, then you know that every June and December is when I make some adjustments to my portfolio. I don't sell everything, I don't buy everything, but I do sit down and say, look, I'm going to replace certain stocks. I'm going to add X, Y, and Z companies to kind of make me more balanced and really put me in a position to succeed. And that time is coming up. June is right around the corner. But also, this is a time to adjust, what we thought coming into 2022 and what we thought was going to work. It's an opportunity to say, look, hey, we were wrong about some things. At least I know I was. I don't know about you, but I was wrong about a few things. Let's start to make those adjustments. Now, it can be a bit difficult, right? Like, how do I know that, this stock is down and this one is down? Which one do I sell? Should I sell, and what should I really look for before I start to make that move? And this is more of a long-term focus as we are going through this. So I'm going to give you an example of the things I look at and how I start to make this. I call this moving day in June, and somebody's going to ask me, what is moving day? How do you decide what to sell or not? This is that video to walk you through that. I'm going to go through a real example for us. So in this case, and I'll put this up on the screen, this is Target. I own Target. You can see that I own was $887. This is from my public account, and it tells me how long I've had it. So I've had it for 308 days. So come June, end of June, I'll probably have it for about 365 days, an entire year. And what I'm going to do is see how Target's performing in context. And I think that is the most important thing. I want to see how is the stock market done over that time? Because my job, if I'm going to choose individual stocks, you need to beat the S&P 500. Otherwise, I'm taking on too much risk for too little return. So that's number one. But also, because the S&P 500 isn't doing all that great this year, at least so far as of this recording, and this is Thursday morning. I thought I was going to do a recording yesterday, but it's Thursday morning. So I want to see, are you beating the S&P 500? If both of y'all are negative, which I think they are right now, how close is it? How close is this race? But also dig a bit deeper. Is Target better or worse than its competitors? And then make a comparison there. So I'll show you exactly how to do that. Now I'll put up the screen for Yahoo Finance. So right now I'm looking at Target. Okay. And the first thing I want to do is go back in time and go here to date range and see from the time I held it, how much has Target made? So 308 days ago, as of this recording, I think was like July 1st of 2021 until today. Hit apply, and boom, this is what we got. Okay, so the first thing I want to do is, well, hey, how did the S&P 500 do over this time frame? And the answer is this. So Target is down 3.83% compared to the S&P 500 at negative 1.47. So I am very close, but I'm not that far off. But here's the thing. This assumes that you see here where Target is down 3.88%. This is if I put everything, all 800 and whatever dollars in Target on July 1st and did nothing else and held it. That's not what I did though, is it? I dollar cost average, and every week or so I add a little bit more, add a little bit more, add a little bit more. And this is one of the reasons why I talk about dollar cost averaging and adding money to your investments consistently. I was able to kind of pick it up at certain dips, and that actually helped my returns. So in context, and you can see it moving a bit now, because again the market is live as we're watching this chart change. And I'm just going to stick with the screenshot I took, otherwise we're screenshotting for the next 15 minutes. But in either case, at the time that I took the screenshot, and this was at 9:37 this morning, I was down 1.13%. So I am slightly better than the S&P 500 for Target. So this tells me right now I'm probably going to keep Target, assuming things continue through June or July of this year. So I'm probably going to keep Target. And this is one of the things I'm looking at. Did you beat the S&P 500? But also, how did I do personally? So Public gives you that specific number. Every investing account should give you how you're returning on that particular stock, because if you add more money to an investment, the math changes and it's hard to calculate on your own unless you are really good at Excel or something like that. But here's the other thing that I want to look at. Well, for Target, right, I'm up. This is pretty good, but I want to compare it to other competitors. Some of the biggest competitors that most of us would think, probably a Walmart, maybe a Costco. I know they're a bit of a membership store, but these are probably some of the best two comparisons, especially a Walmart. So if I'm comparing here, the other part of the question is, can I get better? Right? Is there an investment that I could choose that will do better than a Target? And right now, over the same time frame, the answer is yes. Costco, over the exact same time frame that I held Target, and I do own shares of Costco, just not on public, so it's not going to give me the same easy chart to understand. Costco was way better at 34%. Why y'all hear me talk about Costco a lot more too. And then Walmart was better as well at 8.6% at this point in time. So the question would be, should I hold on to Target, or can I switch and get one of those other stocks and hopefully that trend continues? Now, yes, the answer would be, if I were continuously investing the same way I invest in Target, maybe I would have, instead of 34% gain for Costco, maybe I'd be at 35 or something like that. But we didn't do that, so we don't know. So the easiest apple to apple comparison is if you invested on this date, which is what you did in this case for Target, and comparing apples to apples to the other two companies. So for now, I would probably keep Target. I think Target is solid. It's beating the S&P 500. But the better question is, should I add a Costco or should I replace it with something like that? So personally, I already own shares of Costco in a different account. So I'm gonna keep Costco. Y'all know I've been talking about Costco since 2020. So I'm likely to hold both. Now, this process is what I use to compare for every stock that I have across the board when I'm ready to make these specific changes. So maybe it's an Amazon. I'm gonna go back, see what I made on Amazon and when I bought Amazon, and that time frame is gonna be different. I've had Amazon for longer than 308 days. So I'm gonna go back and say, from the time I held it to the time that I'm looking at it, how has Amazon done? How do I compare that with everything else? Other tech names that are in that space, how do they compare? And then make a determination of, hey, these two things aren't matching up. This is not making sense. I might have to get out of this. So another example right here, and I'm just doing this as we go because I do not own these two companies. Let's say that I am looking, let's go here, just because I know this one is down. Let's look at Block. And let's compare that to the S&P 500. Let's see if it's going to load for us. Okay, so let's say that we bought Block at the exact same time in July 2021, and we can see that, yeah, it's down. But it wouldn't make sense for me to compare it to Costco, right? That doesn't make sense. Those two things are not equal. That doesn't give me enough context. So what I would do, I'm gonna compare it to the S&P 500. How has the overall stock market done? And we know it was negative 1% or whatever it was. So at this point, right, from July 2021 to today, and this says May 4th. I don't know why it didn't have May 5th like we did on the other. See if that updates just a bit for us. I don't know if it's going to change anything. But in either case, we have it here, right? It's bad. It's down 59%. But let's compare that to another stock that is similar to it. And for obvious comparison reasons, that would be PayPal, PYPL. And we'll see how that one is doing. And it's even worse, right? So it's even worse. So this tells me that, now we know this too, fintech is just not done that well. And these two companies are very similar. One is down 59%, one is down probably 69, almost 70%. So in this case, if, right, and this is a subjective question, if I truly believe in fintech, then and in these payment stocks, maybe I would probably hold on to a Block if I believe that. No, I don't right now. I don't think this sector is great, just based on how the market is going. So I would probably sell both of them, which is what I did back at the end of 2021. So I didn't see all this. This was this bad. I think I lost my little 20 or 30%, which I'll take if it's down 60. Okay, but my thing is, what is it in context? How to compare it to what else is going on in the market and what else is going on in the spaces that this company competes. Another one that isn't totally 100% relates, but is close, is something like SoFi. I can see, okay, well, maybe those are the two biggest players. How is SoFi doing? SoFi is right in the middle at 64%, down 64%. So again, the entire sector is down. So that says, hey, it wasn't just me if I invested in Block. It's not just my fault. It's all down and it's all in this same sector. But which one of these is best? And do I believe in this sector and do I want to continue to hold it? Another company you can throw here, and I'm going to clear out some of these so it's not too confusing. Let's say Affirm. Again, Affirm is not the exact same business as the others, but it is a popular fintech name. And if we throw that here, that one is also down. And it, for a while, it was going in a different direction, as you can see. And again, it's also down in that negative 50 or 60% range. So in either case, you get where we're going here. This entire sector is down. This is why I sold it. But I want to see how is it doing compared to its peers. And definitely SoFi and PayPal are definite peers. They definitely go together. Affirm and SoFi, maybe not so much, but you can Google what your biggest competitors are, see how they're doing on that time frame, and then make a determination. Do you believe in that sector? Do you believe in those companies? And what do you think the stock market or the entire market is poised to do? So because we know interest rates are going to continue to rise, because we know that they haven't done well, they're probably going to continue to not do well in this space right now. So for me, if I'm holding fintech, I'm probably not holding on to it because of the reasoning that I had at the end of 2021. We knew interest rates were going up. Things had not gone well. You see Affirm had started to tank, right? If I didn't own it, but if I had, I got out of it, just like I did for Block. I said, look, that's enough for me. You go do what you do, and it's just continued to tumble, right? But these are the scenarios and things that I work through. So for everything that I own, when I decide, Capital One is another company that I'm looking at, like, hey, I'm not sure if you are meeting the expectations that I wanted you to meet when I bought it. I will go back. How long have I held Capital One? When did I buy it? How has it compared to other banks in this space, other banks and credit card companies in this space, number one. And then how did I do as a personal investor? Because I've been dollar cost average. I've been putting money at different points. How did I do comparatively, and then make a determination? Because banks haven't done what I expected them to do either. So there may be a pivot here. But those are the questions we're going to ask. And based on what the chart is telling me, based on how I have performed as an investor, that's where I decide this stock needs to go. We need to go pick up something else. We're going to add something else based on how the market is doing. So if you see me hold on to a target, you're like, hey, Target's not doing that well. It's because I might be doing a bit better, but also its competitors are, a little bit better or a little worse. Depends on what's going on. I already hold Costco, so I'm fine there. And I'll probably hold on to Target because Target did beat the S&P 500. So that's not a cause to sell in that case for Target. Not a cause to sell. I can hold it, but there are some things that are doing better. So you have to decide. You have to say, should I switch these or should I keep both? And make those choices based on your own research. All right, so that's it for me. I'm going to go see Dr. Strange later today, so I'll see y'all on Monday. But I will be checking Monday. I'll see y'all on Friday, and I will be checking in the comments. All right, that's it for me. Talk to you later.